Let me then welcome on board Sandip Sabharwal and find out what he's making of the market right now. Sandip, hi, afternoon. Good to have you on the show. Two stocks you track closely, both Interglobe as well as Indian Hotels, giving fresh, solid moves today. Do you think the prospects continue to look brighter? And what if one were to look to add positions at these levels? Would you recommend that at all?
Yeah, Interglobe, I think, is in a very unique position where the competitive intensity, instead of increasing on improved profitability in the sector, actually reduced. SpiceJet has its own issues, which has led to reduced services, and we are airlines like Interglobe, which is the only listed play available on the unlisted are at the cusp of the peak holiday season. So I think the listed Vistara, Air India, etc. I think they'll be able to have significant pricing power. And additionally, the input cost pressures have eased off so significantly. So I think that is also boosting the stocks in the short run. So I think there's nothing wrong in Interglobe. Absolutely, I think strategically also it's very well placed. Long term, it should do well. Indian Hotels has been doing well. The management strategy of uh, expanding across various formats, expanding its food delivery, paths. So I think strategically they are doing very well, and now the big focus only on managed hotels is working well for them. Stock's not cheap at these valuations at all. Like we obviously hold for from very low levels, and we continue to hold. So return potential on absolute basis will be low because it's run up so much, but directionally next 2 3 years should still be good for them.
Okay, so that's a view on Indian hotels as well as Interglobe Aviation. Definitely tailwinds behind Interglobe. Sandeep, what within chemicals, if at all, would you look at buying afresh?
No, sorry, I don't buy chemical stocks because I think it's a commodity where it's very tough to track individual commodity prices and then invest based on that.
So a bit of an avoid given the kind of complicated nature of news flow involved in some of the chemical names. But Naresh, if I had to throw that question to you, FACT, RCF, Archean Chemicals, you have a lot of other names as well, the smaller companies that are doing quite well, alkyl amines, etc. Would you be a buyer in any of these names?
So, in terms of a technical structure, Archean Chemicals, although not a lot of chart history, but that's a stock which has come up on a new 52-week high band, unlike the other names which continue to struggle. And then maybe Tata Chemicals, which has made a good enough base around 1050. These two names look interesting. Others have already moved up quite a bit, something like a Deepak Fertilizer, RCF fertilizer space has already done well. So, out of all the names, ACI looks promising at current levels.
Sandeep, what's the right way to approach some of these defense and railway names? And I ask because some of these select PSUs have actually fallen a good 30 to 20 odd percent apiece from their previous highs or all-time highs. And the last month especially has been, particularly excruciating for some of these names.
I think defense stocks eventually will come into buy range because of the huge visibility of growth and order flows still coming in. The cabinet is still approving new projects, new investment cycle. I think it's railways where we need to be a bit concerned on because there has been a very sharp run up and incrementally new project awards or new investment announcements, etc., are not there. So I think the growth issue could come up in railway stocks, and I think the valuations are still very high. But I would be concerned about railway stocks still, despite the near-term correction. And defense valuations are high, but long-term directional play is still good. So I think we need to wait for the right opportunities to increase allocations of for those who don't have buy into them at some stage.
Sandeep, curious to know how you've read into Zomato actually acquiring Paytm's entertainment ticketing business. How do you think this deal is going to pan out? Seems like at least when trade started off that it's more beneficial for Paytm because that was the stock also which was holding up. But what's the take now on both Paytm as well as Zomato?
So I think how the valuation happens in these kind of deals is very tough to predict. So it's not a small amount. Like 2,000 crores plus is a very significant amount, and what Zomato gains out of it and how they can leverage that to improve earnings is something we have to see, because on their core business they've just started becoming profitable last 2 quarters, and now they're going for this large acquisition. So I think that is an issue with some of these new age companies. As far as Paytm goes, I think it's a question of uh, so I think it shows a sort of desperation on their part to get in cash flows. So the internal picture could be even worse than what we can see from the outside. So I think I would be cautious on Paytm.
Okay, so a little bit cautious on Paytm, but at least for now it shows that on their balance sheet there's enough cash. We'll have to see how really it pans out. Just taking stock of what else is happening in the market right now. Autos, as Aisha was pointing, is clearly on the back foot today. We were speaking with the TVS management a while ago. They were confident about the festive sales. But Sandeep, what would you do with that basket? Is this dip a buying opportunity, or just stay away and perhaps the best is done for autos?
I don't think best is done. I think it's a phase of consolidation. They have done so well, most of these stocks. If you see, uh, like Tata Motors, obviously we've exited a month back, but it also moved from 400 to 1100 plus. Like stocks like M&M have moved from 800 to nearly 3000, etc. So when after such sharp up move, there has to be a phase of consolidation, and that's getting also exaggerated by the near-term slowdown in the overall market. However, controlled input costs, low fuel, like there's unlikely that fuel prices will go up, and the festival season should be decent, I think, for auto companies. So once this consolidation phase gets over, I would think that this is a sector which definitely could have potential.
Not really writing it off. It's only consolidation, might just pick up. So maybe you want to start betting on that space again. Thanks, Sandeep, for making time and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.